the speed of zero DT theta. We're going to show you some graphs today about how fast this stuff happens, right?
Okay.
Zero DT markets are characterized by their exceptional liquidity and the rapid pace at which trades occur. According to Black-Scholes, the sensitivity to an option's price to time decay, or theta, intensifies as expiration nears, making the final trading day particularly critical. This heightened theta and the associated volatility present both significant opportunities and risks, necessitating a deep understanding of intraday price movements. Tony Batista, how quickly do the zero DT options really come out as expiration? How quickly do the premiums really come out as expiration approaches?
Fast. I'm going to see how they quantify this. But I mean, everything has to go to parity by the end of the day.
Would you call it linearly?
I would call it linearly.
Perfect.
Linearly.
Let's go to the first slide, Beth. So we did a study using 2.5 years worth of data collected every 10 minutes. We amalgamated results to find, I love that word. I don't think we've ever used it before on this show. Amalgamated results to find the mean behavior over the course of a day, as well as the one standard deviation dispersion. Note that this is tracking at the money premium, not out of the money premium, and not any particular trade. So as the spot price changes, so will the strikes of the options considered. You understand that, right? We just stayed at the money. We repeated the analysis for 40 deltas and for 25 deltas. Okay?
Yes.
All right. Here's your first slide, sir. And I cannot, let's see, what delta is this, Beth? This all deltas, right?
Yep. Set straddle price.
Yes. Oh, this is the straddle. I'm sorry. Take it back. This is the 50 delta. And so a couple things to note on this graph right here. First, you can see that it is linear in fashion because it just goes, it's a pretty straight line. But you can also see a little
linear lower.
Yeah, they're all linear.
Linearly lower.
They're all. If there's something that goes higher here, we'd be in trouble. But you can see a little uptick at the end of the day.
Yes.
See that?
Yes.
That's why straddles are tough.
Yes.
Right on the close.
Yes. Yep.
You don't want to hold those suckers.
But if you are doing a straddle, let's put a little SPX would be the place to do it because it's cash settled and there's no.
Yeah. Obviously, it's cash settled.
I just want to put it out.
There's no overnight risk, but this is a tough. I mean, this is straddle. We don't usually do straddles, but we wanted to show you like that little uptick at the end of the day, and we also just wanted to show you kind of to what it looks like. But now we're going to go to 40 delta. And you can see as you get a little bit further away from the at the money, A, you eliminate that little uptick at the end of the day, and B, it's kind of a cleaner line. Okay? And this is your 40 delta. Now, if we take it one more step.
Slowly return step by step.
This is your 20 delta, right? It was a 20 or 25, Beth? I don't remember. 20.
25.
25, okay. So this is your 25 delta. So we did 50, 40, and 25. This is closer to where we are. We're usually like 20 to 25. And you can see here at the end of the day.
Look at how it moves in a good direction. Yeah. If you're selling premium.
So you want to be outside a little bit. Now, this is the end of the day. It's hard to be at the 25 delta. I mean, on paper, it looks easy, but when you're actually trading it, it's much harder because stuff moves around. And 1 second is 25 deltas, and 3 seconds later, it's 50.
Sure.
So it's not, but this is just the amalgamated results. So they all come together. I think you're seeing here.
I want to be a dentist.
I think you're seeing here that you want to stay away from the straddles. You want to go as wide as you can, especially if you're going to hold late in the day, which we don't really do. And also, you'll notice that this is kind of the cleanest line, until the end. Let's go to the last slide. So while the zero DT trades with undefined risk are often untradeable due to buying power reduction, because remember, a one lot, the way they presented here, would be $120,000 around that. It's kind of heavy. So usually we spread stuff off just to reduce the buying power requirements. Like if you come to our live show, we may do a naked zero-day strangle in SPY or in ES, but we won't do it in SPX.
Right. Just
requires
the
too much
amount of buying power. Right.
Regardless of how far out of the money we looked, on average, the premium came out of an option almost linearly. Linearly, as the day went on. Linear.
Like you're asking a question. Linear.
It's linearly. Almost linearly as the day went on. The only noticeable difference was in the last few minutes of each day. The out of the money premium disappeared, but the options that were out of the money at the market close could go anywhere.
Sure.
And sometimes they went up. So the DTE, the zero DTE options premium, provides some of the fastest theta decay available, and they do so all trading day long. But at the end of the day, it's a little harder to stay out of the money than you may realize. If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.